Hey, my name is Joe Edwards. I'm an enterprise account executive with FlashSpread. Ariel Tribush, he is our vice president of commercial lending. He is going to be taking point on today's webinar. He's going to be sharing some awesome info for everybody as it pertains to breaking down other deductions and demystifying supporting statements. So very exciting stuff that we're going to be covering today. A lot of automation that makes everything you're about to see much, much easier. And Ariel, you are muted.
Yeah, so I think that everybody on the phone is familiar with EBITDA. You know, one of the important things to note is that when you're spreading tax returns, which are becoming more and more popular as the mainstay and the main form, the main financial form that people are using as opposed to internal financial statements, there are things that are buried in the, some of the things are on page one, but then things such as amortization are buried in the statements. Go to the next slide. So I think everybody's probably familiar with what EBITDA is. And so really the goal of this, as you might know, is just to see how much money the company has, right? So that you can determine the size of the loan. So when you're sizing the deal, you're looking for debt service coverage, and oftentimes EBITDA is kind of the cash flow that you're looking for there. So you add back all the non-cash events that really would impact the tax return, but shouldn't impact the direct cash flow method. And so what I want to show is just a very quick demo on how we use tax returns within FlashSpread to automate the underwriting process or spreading process, if you will. So I'm going to go ahead and share my screen. I think that was, yeah, I'm sorry, Joe, can you just go to the one more slide?
Yeah.
Sorry about that. So the goal here is just to show you how we can dive into the supporting statements. And so those can be found on a number of different fields, such as other current assets, other deductions, other current liabilities, and then just to show you how we can try to arrive at an EBITDA and or direct cash, net cash flow number with as much automation as possible. And with that, I will share my screen. And dive into FlashSpread. So FlashSpread is both a standalone application as well as we're integrated to some of the biggest loan origination and fintech systems out there. So feel free to ask us after the call if you are currently using an LOS and you want to know if we're integrated, or if you are in Excel and you want to get out of Excel. Me and Joe would be happy to talk to you more about how to get up and running, which is a very short lift, very, very light lift. So you're going to log into FlashSpread, you're going to hit your browse button, and you're going to find the tax returns that you want to upload. So I'm going to handpick a couple of these guys, right? And what happens is we're going to start adding these to the what we call upload queue or the document queue. Our sweet spot is about 30 to 90 seconds to process a return. You'll notice that there's a status here that says pending. That means we're still uploading it to the server. Processing means we've actually started to grab that file and convert it into a digital asset. One of the really important things to note is that because we deal with both scanned documents and what people would call machine readable or digital files, oftentimes there are watermarks and hole punches, and one page can lean to the left and another page can lean to the right. And what's going to happen is we have to clean up all of that data. I'm going to turn off my video because I think I'm dragging my internet a little bit. There we go. And so we have to clean up all of that, what we collectively call noise, and isolate the data that's required for a file. So you'll see here, we also have these please validate or no errors, no errors. So that's kind of your status update real time of what's happening with the file. And so I can come in here and just to kind of orient you a little bit, we do personal files as well as perfectly fillable PDFs. Business returns. And so if I come in here, I can look at Mr. and Mrs. Smith joint file, and I can open it up and I will see the actual tax return. right? So all of this data was lifted without a single keystroke, okay? And so this goes all the way, in this particular case, all the way down to the Schedule E. Now we do support Schedule 1, A through F, multiple C's, multiple E's, multiple F's, and the 4835, I believe, on the personal side. But what's nice about this is it's a nice, clean, consistent feel, and this will bring you directly to what we call the spreads. All of our spreads, and because I'm looking at individual, will go to their personal cash flow statement. All of their spreads are completely customizable. So if this does not look or feel how you would typically get to a personal cash flow, don't worry, we can change just about everything in here. But I'd like to draw your attention to just a couple of fields here. So we have a mapped field. So if I click on this little button, it's going to open up my override screen. So I can override that value. And it's going to actually take me to the tax return and show me, hey, this tax return has $52,000 for wages. So that's a one-to-one map field, which I can override, put in a comment, and that'll go into my history bucket if there was an update. Then we have what we call an input field. So I can put in whatever number I want, right? It's a big number. So you'll see that the total salaries and wages goes down quite significantly, right? So I made a big one just to kind of illustrate it. Now, this is what we call the calculated field or report level calculation. So you can't override that one. So we have a map field, we have input fields, and then we have calculated fields. The nice thing about the input fields is you can actually use the old Excel equals and then put in multiple numbers. So if there was an aggregate number that you wanted to add, we could take care of that as well. And then you'll only see the aggregate number. But then if your partner or collaborator wants to see what's in there, you can go back and see that. The other thing that we have is oftentimes we'll have the need for an aggregate number, such as interest income. We have a taxable and non-taxable amounts. And so we want to see both of those. So we have the ability to kind of expand and collapse, right? And so we can build your spreads out however you want. Let's see how these guys are doing here. So 2020 Lending House came through. Once it uploaded, because my internet is dragging today, it took about 41 seconds for us to process the file. This one came through with no errors. So if we go ahead and take a look at it, it's the same process, right? We went all the way down. This has 2 K1s in this particular example. We lifted all of this data out without a single keystroke. Now, the question that many of you probably have is, well, how do I know that this is valid, right? How do I know that there's no issues? Well, in addition to all the fun buzzwords that you might hear, like, machine learning and artificial intelligence, proprietary algorithms, in addition to all that fun stuff, what we do is we do a simple math check, right? And so at the end of the day, if something doesn't balance, we're gonna go ahead and flag it for you. You pull up your little fix-it window, and then I can easily see, if I zoom in, I can see that that 28283 does not have a 1 in front of it, and I can clear that error and hit accept next. Now, the whole point of this is to save you time, introduce consistency, and reduce errors. Because if 1 + 1 doesn't equal 2, we're going to flag it. And we have those safety nets built throughout the system. Now, moving on to what we talked about earlier on the reason for this webinar is to talk about other deductions. Right now, it's not just limited to other deductions. There could be statement details under cost of goods sold, right? There could be statement other income. There could be statement federal supporting statements for all these other things. The one that's most commonly used, at least we've come across most frequently, is under other deductions. So if I come over to my other deductions, instead of just having the fix-it window, I also have statement details, which we automatically grabbed. Right? And so you can see we automatically grabbed all of them. We auto-classified them to the best of our ability, and you have the ability to override it. So if I go down to my supporting statements, after my K1s, right? So here are my federal statements, and I can zoom in, and you can see that from automobile and truck expenses, 54,000, all the way down to 50% of meals was classified. And you have a further categorization check, because up here you can see that nothing's been unallocated, which means this line item, I believe is line 19 or line 20, matches the total amount that we automatically grabbed. Now, if you want to override it, you can override it. You can add new categories. And the nice thing about this, at least I think one of the really, really cool things about this, is now those other deductions can be used in your reporting or your spreads. So for instance, in this income statement, we have a whole bunch of stuff, right? Other deductions is just one of the main categories. And so here we have that 700, okay? But below that, we want to know not just what the total top aggregate number is year over year, because that can have relatively light fluctuation, but in the details, there could be some major fluctuation. For example, merchant credit card fees went from 127 all the way to 212, right? That's something that we want to be able to kind of really look at and see and even build rules around, because we can build rules in here that flag things for further review. So that's nice, but how does that pertain to EBITDA? Well, as we mentioned, this is a redacted file, so it goes to needs attention, and it's just going to ask me to put in a social. I'm just going to make one up so I can process the return. And so as this pertains to EBITDA, amortization is buried way down in the statement details. And so if I look at my entity cash flow where I'm actually building out EBITDA, we have depreciation, and I can expand and I can see this comes from a couple of different places. And then we have amortization, right? And so that amortization, this one right here, actually came from the tax return other deductions statement. So I can actually open up the document from this screen, view the actual document, and I can go all the way down and I can go to my other deductions statements, sorry, my federal supporting statement, find other deductions, and there should be amortization for, I think it's $21,000. Go amortization 21,792, which matches up right there. So what we have done now is we pulled everything out to get to an EBITDA number without a single keystroke. The only thing that we would have to do is add back the taxes. Because it's found on the 1120 and not the 1065, we've left this as a manual entry. So then in this case, I could open up my document again. I could look at what the tax number is, and then I can add back $999,000. And that'll get me to my EBITDA number, or in this case, after our K1 activity, then our total business cash flow. All of this is used to get to our debt service coverage number. I'm going to go back to the previous example because we have multiple years worth of data here. And so going back to my spreads, go to my entity cash flow. Let's pretend I've worked through some numbers. I'm going to set this loan up to be, let's call it a $775,000 loan. Interest rate is 7.75. It's 120 months, and it's amortized. Right. So now I have my monthly payments. And so the whole concept here again is just to kind of simplify things. So we upload a tax return, we lift the data off of the tax return, we make sure that there's no issues with the tax return and the data matches what's on the PDF document. We then come over to our spreads, we go straight to the analysis. We come down here, we can add back our taxes, we can do some other fun stuff if we wanted to. We can look at our K1 activity if there was some. We can do the pop out where we can actually see where that came from. In this case, there's only one K1, okay? So that's how we get in it year over year. It's the same company. So we can see all those distributions. All of this, again, I just want to repeat this again and drive this concept home. It's completely customizable. So whatever you need for your company, the way your bank or financial institution underwrites, we can work to that. The proposed comes from this debt service calculator right here. Then we have our existing debt, which is a different report altogether. So this report is found, if I click back, I could go to my debt schedule, but we want to actually pull it forward from this page so that you don't have to jump around the system. Like the whole goal here is to be as intuitive as possible and make your life easy. And so I pop that out and I can see my annual payment to Bank of America loan for $12,000 a month, and annualized gives me this number. Now I have my debt service coverage and I look at my most recent year, I'm happy with 2 times coverage. So now what do? I'm going to convert this to a deal. I'm going to name the deal Best Bank number 3. And this is 2018 to 2020, I believe. And if I wanted to, I can choose a deal type. And this deal type, again, is company specific. So you can actually create this list of deal types that you want. It's not just beholden to 7A and 504, but it's optional. Deal ownership cannot be blank. Well, I'm not quite sure what I did there, but let's just go back because I've already created a deal today. So this sample deal here, if I click that button, all that's going to happen is we're going to bring over lending name as the primary borrower, bring over John Smith. And because that button didn't work for whatever reason, I'm going to re-enter it. Amortize, get that loan back in there. Again, I can have more than one loan. So if you're piggybacking loans off of each other, different rates and different amortization schedules, you can have that. And then we'll take the aggregate of the annual or monthly payments, depending on how we're looking at the deal. We have a percentage ownership. So if you have John Smith only owns 25% in 2018, then he buys some more of the company, or he's awarded some vested shares, goes up to 35% and then back down to 25%. Or I can edit this and just say, you know what, he owns 35% across the board, right? To make it easy, now he owns 35%. That's going to impact his numbers down here, the primary cash flow. So I want to just reiterate, we can treat the primary borrower or subject entity differently than the affiliates, differently than the guarantors. You can actually take a percentage ownership for the affiliates and apply that to their net cash flow or to their free cash flow and to their existing debt. So all of that is available out of the box. And then this is going to be the details, right? So you can actually click into the report again with the idea of just bringing stuff forward so that you don't have to click around the system. So I'm right now in a global analysis, but if I want to look at the primary borrower, the subject entity's cash flow, I can actually open up their report from within the global analysis without losing my place in the system. And I can further break out their existing debt. So all that is available from within the global cash flow. Now this can be, you can have more sections, you can have less sections. I've seen people that just have entities and individuals and they do the net. You can do the subject entity cash flow and their existing debt. So there's many different ways that you can do this depending on how your particular institution underwrites. And I think all of this can be exported to Excel. You just hit export to Excel. It's going to give you a nice little Excel workbook that will open up. You'll have a tab for everybody who's participating on the loan. The same thing goes for all of the individual and entity level reports. If you press the export to Excel button, you can download a nice little workbook with all of your stuff. So if you want to add it to your credit memo, you are certainly able to do that. So with that, I'm going to take a quick pause because I know I threw a ton of information at everybody, but I just want to take a quick sort of recap. We take a bottom-up approach where you drag and drop the tax returns in. We're going to parse that data. We're going to categorize it based on EIN and year, put it in the right place. Then you're going to go in, you're going to do your add backs if there are any, or just a little bit of analysis on your loan. If you want us to pull other deductions or file or amortization or other items from statement details, we have the ability to do that and bring those to the reports, bring them to surface in the reports for analysis. Then you press a button, you can move everything into a global analysis for a global pro forma view of the ability to repay a loan. You can export all of that to Excel and you are done. So quick pause, open it up for any Q&A. If not, I think Joey has some closing remarks. No, okay. Joe, you want to close it down?
Absolutely. If we don't have any questions, that's really what we had on the agenda for today. Ariel, thank you for helping demystify some of that stuff. You know, as funny as it sounds, every time we get that, can you export to a CSV file? Seems to be a lot of excitement on that one. It's not the most technical thing we do, but it seems like everybody wants to make sure we do it. And that is a feature that we offer. So I'm sure there was some excitement out in the audience as we covered the Excel CSV portion.
All right. And if
All
anybody,
right.
if anybody has any questions or wants a follow-up one-on-one demo with the larger group at their bank, feel free to reach out to either Joey or myself. Our information is on the screen, and we'd be happy to set up a demo with anybody.
Absolutely. We have our cells and our emails, so very easy to get a hold of us, either or.
All right. Well, thank you and have a great afternoon, everyone.
Have a good one.